Hi, Jonathan York by Financial Partners. Look at the investment markets. So the US government is back open now, but only until the end of January. So really, in terms of the funding, they've just kicked the can down the road for a couple of months. You've still got to come up with a more permanent solution. And from the Democrats' perspective, that all really hinges on the sort of healthcare debate, which supposedly the Republicans are now going to look at over the next sort of 3 to 4 weeks. Now, obviously, with the government shutdown, a lot of the data for October, hasn't been released, and there is now a serious question of whether it will actually be released. Because looking at it, the U.S. Economy lost probably around 150,000 jobs during October. So that's obviously one side of the debate. Obviously, the other side is the sort of rather stubborn inflation out there, which is still running at around sort of just under 3%. So the Fed meeting in December looks like there will be a split vote again, but it appears that the consensus is there will be a 25 basis point cut because of the weak economy on the employment side. You got Miran still pushing for a 50 basis point cut, but you can't really see that happening given inflation is still stubbornly high. And well above the Fed's target of 2%. And just on that inflation front, Trump has now come out and said that actually he's going to look at reducing some of the tariffs on the cost of living sort of products, sort of coffee, beef, etc., that will help to bring down the price of those products. So that's a clear admission that the tariffs are increasing prices, which obviously Trump and his administration have been denying for the last 3 to 4 months. Now again, quite interesting on interest rates. They're sort of, again, a little bit higher than anticipated after that recent Fed cut. The 10-year is 4.14. The 2-year is 3.61. And that 30-year is 4.75. So given the target rate for Fed funds is 3.75 to 4%, you would have anticipated that those rates would have come down a little bit, but that hasn't been the case. Now also equities have hit a little bit of a speed bubble after the Dow and Nasdaq touched recent sort of highs. Certainly concern over some of those valuations on the sort of high-tech stocks. Now with Congress reopening, the Democrats then had enough votes to push through the release of the Epstein files. So that is now before the Senate. Apparently Trump is sort of welcoming this, which is sort of quite interesting because he's had plenty of opportunity to be able to release these files and so far has sort of put up roadblocks at every opportunity. Also come out in recent disclosures, Trump has purchased around $82 million worth of bonds since August that will be affected and impacted by the policies that he sets. And still no resolution to the Ukraine-Russia conflict. Now oil has backed off, currently is 60.30 and change. Now in the UK, obviously sort of crying out for that further rate cut, but really pretty tough times out there because despite rising unemployment, you also got inflation that is nudging up as well. Although what is interesting is that sort of cost of funding for the UK in terms of gilt yields, they have nudged back down, indicating that there's slightly more demand out there. Now, the EU sort of grinding towards sort of Christmas on the holiday period. So far, the winter hasn't been too bad, but obviously energy costs are really at the forefront out there. Now in Australia, really hoping that CPI does start to nudge down. The last print of 3% was a little bit of a surprise. And that's really impacting the ability of the Reserve Bank to be able to cut rates further. Now here in New Zealand, it looks like there will be some slightly better news on the CPI. Last print was 3%, but it looks like for the December quarter, we're looking at around sort of 2.7, 2.8%. And then expecting it to fall further going into 2026. Now the Reserve Bank meeting next week, expected that there will be a further 25 basis point cut, taking the OCR down to 2.25. Because after the November meeting, the next meeting isn't until mid-February 2026. Now what is encouraging is that the housing market appears to be sort of picking up after the recent rate cuts. Starting to see quite a bit more activity coming through, a little bit more houses coming onto the market, but also as well an increase in terms of the first home buyers coming through. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.